Welcome to Alpha Recap, your post-market download of the day. Markets were closed for the weekend, so today we are unpacking what happened on Friday. As always, if you have questions, you can reach us at stockalpha.ai.
Good to be here. Friday gave us a pretty clear set of themes. Heavy, attention-driven trading in mega-cap names, a PR push about AI getting deeper into Chinese factories, and some big spikes in retail search activity that often foreshadow volatile moves in crypto-linked stocks.
Let's start with the loudest signal, Nvidia. The stock finished the day down 1.64% to $186.94 on about 186 million shares traded. That is huge volume for a down day.
Huge indeed. When a primary AI bellwether like Nvidia trades that heavily on weakness, it's not just a headline, it's a transmission mechanism. The market uses Nvidia as a shorthand for AI optimism, so outsized volume there tends to move sector ETFs and other mega-cap growth names.
Right, and in plain English, that means when Nvidia sells off on big volume, people who own funds or ETFs with big Nvidia exposure can see their positions wobble, and that can create knock-on selling across the growth complex.
Exactly. High volume on a down day often signals distribution, professional money taking profits or repositioning. Short-term traders should watch whether that volume cools and price stabilizes, or whether Nvidia prints lower lows. Lower lows would be a clearer sign of broader risk-off for AI beta trades.
But there's a twist to the story. We also saw a PR narrative about deeper AI deployment in Chinese manufacturing. That's an important structural development because it changes the likely winners from AI spending.
Because if AI capex shifts more toward factory automation and on-premise compute, the gains might flow to chip makers that sell hardware into industrial environments, to sensor makers, and to companies that build industrial software, rather than to pure-play consumer AI apps and services.
So, in a way, Friday looked like both a tactical and a strategic story. Tactically, we saw Nvidia take a pullback, and strategically, we heard a narrative that could broaden the list of beneficiaries over the next few quarters.
Which brings up trade implications. For traders, it's a watch and react game. Look for follow-through volume. For longer-term investors, it's time to separate the signal from the noise. Stronger factory adoption of AI is multi-quarter and multi-year. A single down day in Nvidia doesn't change that thesis, but it might change the allocation between software-heavy names and hardware or industrial suppliers.
Let's talk about a second market mover, retail attention. Google Trends flagged a spike in searches for coin stock, about 10,000 searches and up 200%, and an even bigger spike for SpaceX launch, roughly 10,000 searches and up 500%.
Those are classic early warning signals. When retail interest jumps like that, we often see outsized intraday volume and widened spreads in the relevant names. The coin stock spike is especially noteworthy because it tends to precede short-term swings in crypto-linked equities and exchange stocks.
So practically speaking, if you were holding an exchange stock or a crypto-related ETF on Friday, you were more likely to see bigger intraday ranges. For momentum traders, that's opportunity, but it's also higher risk without strict stops.
And don't forget the SpaceX signal. Event-driven attention like a launch can ripple through the supply chain. Aerospace suppliers, launch service partners, even component makers. Those moves can be sudden and sometimes disconnected from fundamentals until the press releases come out.
There was some crosstalk between these attention spikes and the heavy volume we saw in big names. The note we read suggested that retail spikes likely amplified volume in already liquid names like Nvidia and Ford.
Speaking of Ford, that stock closed up about 1% to $13.99 on roughly 132 million shares. That placed it among the most actively traded names of the session as well.
That's interesting because it hints at rotation, at least intraday, into cyclicals. When an auto heavyweight trades with exceptional volume, it can drag related sector ETFs and parts suppliers along for the ride.
But the key question with Ford is sustainability. Was Friday's action fresh buying into autos or just intraday repositioning? If the latter, the gains might not hold on lower volume. Traders should watch follow-through volume and whether other cyclicals showed similar strength.
Now let's hit a corporate governance tidbit that matters. A director at Air Products disclosed a $19.9 million stock sale. The filing didn't include share count, which makes interpretation tricky.
Insider sales at that size can weigh on sentiment, even if the rationale is benign like tax planning or diversification. Without share count, investors should look for a follow-up filing to determine whether the sale materially changed insider ownership.
And if rotation into cyclicals is happening, a sizable insider sale can add to selling pressure in industrial names and temper any sustainable bid.
Shifting gears to healthcare, two non-price items stood out. First, a book from the American Association for Physician Leadership on dual physician marriages. Sounds niche, but it's actually a labor market signal.
Labor signals matter for big healthcare operators. If physician recruitment and retention get tougher, companies like United Health, Humana, and large health systems could face higher costs or service disruptions. That feeds into margins and long-term outlook.
Second, the Boston Globe announced a rare disease summit on February the 24th, 2026. Conferences like that often produce deal announcements or clinical updates that can move small biotech names sharply.
So for healthcare investors, watch HR trends for big employers and keep an eye on pre-summit releases that might spark idiosyncratic moves in specialty biotech.
On the international front, Zoomlion confirmed it will present at ConExpo in Las Vegas next year. The company didn't give sales or guidance tied to the show, but these appearances can lead to tradable order announcements later.
True. For machinery and construction equipment investors, the tradable catalysts come only if the firm posts bookings or contracts after the event. Until then, it's a watch item.
Let's pull those threads into a pattern summary. First, attention-driven volatility is prominent. Retail searches and big names trading huge volumes are amplifying intraday moves.
Second, AI is migrating from demo rooms into factory floors. If that narrative sticks, we could see more capex flowing to hardware, sensors, and industrial automation, rather than exclusively to cloud-native software plays.
Third, rotation signals were mixed. Nvidia pulled back on heavy volume while Ford ticked up on heavy volume, and an Air Products insider sale added a bit of uncertainty. So direction remains uncertain and selective.
And finally, event-driven microcatalysts like the Rare Disease Summit and ConExpo can spark company-specific moves. Those are the sorts of things that create big returns for active traders who pay attention to the calendar.
We should also highlight the practical watch list for Monday. First, Nvidia price and volume. Does volume decline and price stabilize? Or do lower lows confirm distribution? That will set the tone for AI beta risk into next week.
Second, Ford follow-through. Can Ford, sustain gains without fresh news? Watch whether the gains hold on lower volume. Third, any follow-up disclosure from Air Products that includes share count and rationale for the sale.
Fourth, retail search momentum. Will the elevated interest in CoinStock and SpaceX launch persist? Sustained search activity tends to precede continued volatility in related names. And fifth, look for concrete supplier or order announcements tied to the China AI story. Those will tell us who actually benefits from on-the-ground adoption.
Let's do a quick rapid-fire recap of the market reads from Friday. Nvidia was down 1.64% to $186.94 on about 186 million shares. Ford was up about 1% to $13.99 on about 132 million shares. Air Products had a director sale of about $19.9 million. Google Trends showed CoinStock searches up 200% and SpaceX launch searches up 500% at roughly 10,000 searches each. And the PR on AI-driven Chinese manufacturing got a lot of attention.
Good summary. Bottom line, Friday's flow combined heavy volume technical signals in marquee names with structural news about AI's industrial rollout and early warning retail sentiment spikes. That mix favors caution. Expect elevated intraday ranges, selective rotation between growth and cyclicals, and headline-driven moves in healthcare and industrials.
For short-term traders, that means opportunities, but you need tight risk controls. For longer-term investors, it means wait for confirmation, follow-on volume, corporate disclosures, or concrete order and partnership announcements before materially changing exposure.
As a final thought, the market often loves a clean narrative. Friday gave us competing narratives: AI optimism versus short-term distribution, and retail-driven attention versus institutional rotation. That ambiguity is why follow-through next session will be so important.
All right, clear takeaways for listeners. 1. Watch Nvidia's volume and price action for clues on AI beta risk. 2. Treat retail search spikes as early warning signals. They can produce outsized volatility, especially in crypto-linked names. 3. The China AI manufacturing story is structural and favors hardware and industrial suppliers over short-term software winners. And 4. Monitor corporate disclosures and event calendars for concrete catalysts before making big position changes.
That's a solid playbook. Thanks for tuning in.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll be back after the next market close.